A thought to begin the year with. The world has never been more heavily invested in US assets. The question investors in stocks, bonds, and commodities must ponder is whether, as previous historical examples have proven, this is a flashing warning signal that a deep and prolonged bout of US dollar weakness is on its way. If this turns out to be the case, then it will have far-reaching consequences for all manner of financial assets in 2018. Russell Clark of Horseman Capital has noted how the so-called net international investment position of the United States, which effectively measures the net assets of a nation versus the rest of the world, has been significantly deteriorating in recent years. So severe has this widening between the value of US external financial assets versus its liabilities been that Mr. Clark notes, using data from the Bureau of Economic Analysis, that recently, for the first time since 2000, US foreign direct investment has fallen into deficit. This joins an already sharp deficit in so-called portfolio investment in financial assets that has been driven by massive foreign participation in US stocks and debt, with foreign investment in US equities as a percentage of gross domestic product more than doubling from below 15% before the financial crisis to over 35% today. Mr. Clark notes how such large changes in a country's net international investment position, quote, tend to be good signs of a potential currency weakness or of potential weakness in bonds where currency cannot make the adjustment. In the case of South Korea, a similar change in its net international investment position in the years preceding the 2008 global financial crisis saw the won strengthen significantly at the US dollar before a sharp devaluation starting in 2007. Where he argues that a similar analysis of peripheral Europe before the continent's debt crisis would have pointed towards future problems. Recent dollar weakness may, in Mr. Clark's opinion, be actually a result of markets starting to price in this effect. In spite of the US having raised interest rates and markets pricing in several further hikes, the dollar has not strengthened as it might have been expected. If he turns out to be correct, and we really are on the verge of a sharp decline in the value of the dollar, then the consequences across global markets may be both violent and unpredictable.